Hi traders, and welcome to a weekend stock talk. Today is September 16th. I hope everyone is, especially for those on the East Coast, are safe from Florence, now a tropical depression as of right now. So I know they've been getting a lot of rain, and lately they've been getting even more. I think the last couple of hours are just piling on. So hopefully for those of you who are out there, please be safe. And we're going to be talking about some market conditions right now. Of course, we're going to be starting off with the S&P 500 as always, looking at the 1-year chart. And here is the S&P 500. Note that we've had a rather dramatic higher high line. Whether this breaks at some point, we don't know when, but this could break at any point. This certainly doesn't have to play out immediately, but in the near term, we do see a resistance. Right now, the resistance is situated around 294, so that is around $3 and change away. And you guys can see that, you know, in previous days, we've talked about how the market has really reversed and is on a more bullish trajectory. So you might be asking, well, Kevin, how come you're always, you know, every time I tune into your stock talks, you know, you're always leaning more bullish? Well, you know, 9 out of 10 times right now, given that we're on this kind of trajectory and that we've broken through the yearly high, this is an uptrend, right? And if I gave you guys a different chart, for example, if I gave you a stock, right, and the stock had a yearly high, and then we had a back test of this high over here, you would have said that, man, this stock is on a breakout trajectory back to the upside. It's almost no different here looking at general market movement. So just take that with a grain of salt while you're moving on. Now I'll take you guys to the intraday chart because we've had some kind of wild fluctuations intraday. I had someone in the group chat, in our Discord chat, talk about, you know, at 12 noon we had what? Well, of course it was the Trump tweet about $200 billion in tariffs again. You know, it wasn't really you know, big news or new news, but you can see the market reaction off of that. But what happened by the end of the day? That is really what's important. And because you can see that by the close, we pretty much regained almost everything that we've lost. Okay, so what does that really tell you for the markets? Well, you should know that, at least for now, there is certainly resiliency in the market, right? The market could have and had the great opportunity to go down and push lower based off of some sort of catalyst, and this was, you know, the tariffs, but the market managed to pull itself higher. That's something for you guys to take off with in the near future, but that, you know, that's interesting to note, right? So you guys can see on the yearly chart we made a semi-tail candle. It doesn't really mean that much, but you guys can see we're still generally on an uptrend, right? Yes, we had some stocks pulling us lower. I was eyeing that pretty closely as well. You know, stocks such as Google, we have Amazon, Apple, right? They all kind of pull lower, those FANG stocks, but then at the same time we had a couple of stocks pulling higher. So you know, I'm monitoring it, but right now, where's the support area, right? Where is really the support area? And the support area is still at 287.72 or 287.60, around that area. Now, if we do come down, you know, I wouldn't expect, unless there's really some sort of catalyst, I wouldn't expect some retest of 287.60 in the near future, let's say tomorrow or the day after tomorrow. And the reason is, if we do come down and retest it that quickly, there's something going on in the markets that, you know, signifies you know, something bigger, perhaps a bigger trend change in which we're looking at. But right now we really don't have that signal, and generally we just have to be bullish as we are moving higher again, right? So yeah, let's take a look at volatility right now. TVIX, so volatility, once again, you know, nothing really new in this chart, right? For volatility, we're looking at the yearly chart, and we can see how volatility has actively declined to another yearly low. So while S&P 500 hasn't really made an all-time high, volatility is making a yearly low. So that has to tell you something that kind of just, you know, kind of strengthens the fact that the market is pretty strong, the economy is pretty strong right now, and that's just how it is. Oh, let me remove that, and you know, this, you guys can see that we broke a semi-support. I keep giving you guys quote unquotes, you know, on the side, because this, when you're looking at these graphs and these ETFs, you know, these aren't really solid supports. These are just kind of, I call it semi-supports, but you can easily break after even a second back test or a first back test. You know, that's just something to monitor for. By the way, guys, if you guys do enjoy these videos or find these videos educational, I do it for all of you guys. I love you guys watching these videos, so continue to do so. And in the meantime, please hit that thumbs up button if you do enjoy it. And I really enjoy talking with you guys in the comment section, talking to you guys with Facebook, or if you guys check out the course as well, that's great too. So let's take a look at commodities. Start off with 4-CL or crude oil, right? Now, I talked about crude oil is really a little bit tricky to trade. And the reason is, I told you guys on the last video, remember on Thursday's end of close video, that as long as we manage to stay above the 67.50 mark, really 67.50 mark, and we close above there, then we are good. This is an uptrend pattern. The question for crude oil is, when is it going to reverse? That's a question, you know, anyone can ask, and that's a hard one to answer, to be honest. But you guys can see that the resistance is at 70.31, right? 70.31, and we've obviously came down from the resistance. This was the third time we tested the resistance. Well, actually, we tested a couple more times, but this, you know, definitively speaking, this is the third time you guys can see that we've hit the resistance line and gotten rejected. But this is on a short-term uptrend, so take that with a grain of salt. This resistance, should we test it again, could break the next time. That's something interesting to note. Note that, you know, our next resistance, should we break that, is 74.32, and is rather an effortless move towards that level once we break this resistance. Where's our support? Now, our support is once again 64.55. In my opinion, you know, if we come down and retest this support, we really have no business with crude oil retesting that support, okay? So if we come down and retest that support, something else is going on, similar to something else is going on with the S&P 500. If we retest that support, something else is going on, and we'll have to reevaluate how we get to that area if we do. But right now, this is on an uptrend, and, you know, this so far looks pretty good. All right. 4-NG. Oh, let me just talk about the crude oil ticker. So the ticker that, you know, if you guys are interested in, is UWT. So UWT does follow crude oil. This is an ETF that goes to 3 times leverage with crude oil. So as crude oil pushes higher, UWT pushes higher. And you guys can see how, you know, we made a tail candle, right? Made a tail candle, and then we came down, and now we can see we made a pretty much neutral candle on Friday that follows and correlates with the neutral candle on the 4-CL graph, right? On the futures graph that we just talked about. And you guys can see that right now, I'm going to actually remove this resistance since we actually moved on top of the resistance. Now you guys can see the next resistance that, you know, just based off the chart is over here. Right. Let me make this. There we go. It's 39.49 or 40, you know, around that vicinity. So, but this chart, once again, points to a more significant uptrend. All right. Next up, we're going to take a look at 4/NG or natural gas futures. So for natural gas, right, we talked about in several of our previous videos how I really was looking for some sort of reversal and some sort of way for natural gas to show us that we are going to do a double bottom. Where are we right now? We're getting close to that area, right? You guys can see the near-term support of 2.744. There's a couple of interesting things that I'm looking at right now. Is the first thing is, you know, I'm looking for more of a bounce. We didn't really hit 2.744. That is interesting to note when we first started to bounce back higher. But now that we're moving lower, and I'm quite interested to see our reaction at, you know, if we get down to 2.744, because we weren't able to test it the first time around. So right now, you guys can see natural gas. What we talked about, natural gas, waiting for a natural gas reversal. Saw the natural gas reversal, reconfirmed the natural gas reversal, follow through with the natural gas reversal, right? Back down. So this is how I do technical analysis. And I try to make it easy for our members and for, you know, you guys watching on the YouTube channel, but, and I want to make it as accurate as possible so you guys can see how it played out as we moved on. So, so I'm looking for a reaction somewhere down here. So for those of you who are, you know, thinking about trying to go into natural gas, I would wait for that confirmation of a reversal, right? Wait for that confirmation of the reversal. The ticker that follows natural gas would be UGAZ, and you guys can see how UGAZ, where did we go, right? Pretty much near the support area at 54.65. Do we have that confirmation yet? We don't, not yet. And you guys can see this is the near-term support. So actually, let's mark the support right now. So that's the near-term support, and here's the next support at 51.32, right? If we just extend this line to the right, so let's just extend this line to the right, and you guys can see here's the next support down there. That's just something interesting to note. Once we find that catalyst for reversal, if futures pop up and natural gas starts pushing significantly higher, that could be the reversal sign, you know. But we're at the support. You know, this is just something for you guys to watch in the near future. All right. /GC or gold futures. Now, for gold futures, this is another one that was difficult to trade, and I pointed it out several times in previous videos. And the reason why it was difficult to trade is there were two patterns that we were really following, right? One was a bull flag pattern, one was a bear flag pattern. Well, where's the bear flag pattern? Obviously, if you guys took this candle and moved it downwards, this would be the bear flag pattern that should play out to the downside. Okay, that's the bear flag pattern. That's the more bearish outlook. But one can argue a more bullish outlook. What would be the bullish outlook? Well, this could be a bull flag pattern starting from a reversal at the support that for a move to the upside, right? So this is a hard one to trade, and you guys can see how quickly the gold is moving pretty much at a resistance, right? You guys can see this is the resistance at pretty much 12.11, 12.12, around that area, and that we've been getting rejected once, twice, actually several times on several days. We got rejected at the area, and finally it gave way and we moved downwards. Now the question is, could it move higher? Of course it can. This is why it's confusing to trade. Of course it can. Gold can completely reverse off of this candle on Monday and move higher. But the problem with this is it could also move lower back towards the support. If we come down to the support 1180, again, I want to look at how we get to that support, but that would be a very dangerous play if you guys, in my opinion, of course, if we come back and retest the support area for you know, gold. So the ticker, if you're interested in gold, has to be JNUG, right? JNUG. Another one that if you guys are interested would be NUGT. That's another one that kind of follows gold. But here's JNUG, right? You guys can see that we formed a low of $6.40. And I told you guys in past videos to be wary, to be cautious. As we're nearing the 20-period moving average, we've had rejections in the past. And you guys can see that we've had a rejection again. That's why you should be cautious, because sure, we could do a double bottom and reverse back up. But like I said to many, you know, to a lot of you guys on the members chat, as well as, you know, the stock talk here, we have plenty of time if gold is going to reverse to get into gold. There's plenty of time. We don't have to guess where the bottom is, right? We have plenty of time. There's a lot of potential, 50+%, should gold go higher, right? But we don't have to catch where, because what happens if it continues on lower? Are you going to be just holding and holding and holding? That's an interesting question. That's one for you to answer. But, you know, even if we got in at the middle, right, we still have plenty of potential to make into gold. Do not have to guess or catch the low end for gold. So, all right. Let's take a look at a couple of tickers. Guys, so if you guys do enjoy these videos, please, you know, you guys can submit tickers down in the comment section down below. You know, I read those tickers, comment on those tickers, so feel free. I have a couple tickers for you guys today. So the first one would be Ford. Now, the Ford ticker, we visited it when I first started this YouTube channel, right? And this was back in April. We visited it because it was pulling, can you guys see? It was pulling this trajectory higher, higher plus higher low, but in a bear flag formation, right? So that was interesting to trade if you guys were to trade Ford. But look at major, you know, follow through back to the downside. And if I just took you guys to a really long-term picture, I want to show you guys Ford on the 20-year chart. So on the 20-year chart, you guys can see a very nice resistance. Like this is at 1735. This number, you might be even like, man, this is so far long ago. I can't remember when it was 1735. And I agree with you, because I don't remember when Ford was 1735 either. It's been a long time. And now we're pretty much back at the, you know, almost the 5-year support, right around $9.40. It's been holding the support, but this is once again a harder one to play. This is a harder one to play because you guys can imagine one can do a support line like this, but one can also do a support line that's trending downwards. Can you guys see this lower low line that's been forming, right? Should we start breaking this support line, which could very well happen because we don't see a definitive reversal on forward, we would expect another drop, perhaps to $8 or lower. So just be careful, you know, on this trend. You know, this is a rather, you know, dangerous move, and it could fall rather, you know, pretty quickly. So just want to give you guys a heads up on this if you guys are looking to forward. And in all honesty, right now, you guys can see here's the support line right now, near term $9.46. We've already broken under it, and once something breaks under a support, I don't really like to revisit it. You guys can see earnings is coming up in a month or so. So that's it for Ford. Okay. Second ticker on tackle is NEO. So NEO is one that you know, you guys can see went on the exchange just a couple of days ago, and this one was heavily traded. And you know, you guys can see that how fast it can move. But remember this, for a stock, regardless of, you know, what company this is, or, you know, it depends a lot on the fundamentals of the company. But since a stock just came onto the, you know, the market exchange, we can expect a lot of volatility, not necessarily for a few days, but even, you know, a few weeks at a time. So as much as it can go higher, right? You guys can see it can go higher from support to, or, you know, from the entry start of the day to the next day, 70% or even higher after market. Look how fast you can lose money, right? For example, if you got in, let's just say, you know, theoretically say you got in during this area pre-market, and then you thought it was going to go higher, you were trying to make some money, you ended up losing 20%, and that's a really big loss. Depending on how much you put in it, that's a really big loss. And therefore, you know, we can't really do technicals on it just now, and I like to do technicals. You guys know I'm here to look at technical charts and see where great entry positions are. With really big volatility at the start and the end of the trade day, we can't see a big picture right now. Sure, I can show you the 1-year chart, but you guys can see that the moving average is only the 20-period moving average is here. I don't see any other moving average line, right? Because obviously we don't have like things like the you know, like the 50-period or, you know, the other moving average. So right now, this is not something I'm really interested in, as the risk is significantly greater, in my opinion, of course, than the reward. All right, last one on ticker is AMD. All right, AMD is one that has been on a very rapid incline. We called it out when it was around $17, and now it's moving higher and higher. So the one thing you guys can see, I'm going to point you guys to the 3-year chart, and we saw a breakout trajectory back to the upside, right? And the big deal about this one is I want to take you guys to the 20-year monthly chart, because 20-year monthly, and I'm giving this a little leeway. You guys can see I'm giving this a little leeway in such that, you know, this line, this resistance line, is situated around, and because we're looking at 20 year, our resistance lines aren't that there's going to be a big range to that resistance line, because we're looking at such a long period of time. Okay, and that's just, and I gave it a little more, you know, not more leeway, but like more strict rules in terms of resistance. I put it at $32. However, the resistance line can, you know, be around $32 to $35 to $36. It's a wide range, and the one thing you guys can see is, do we see any sign of reversal back down? You know, we're near the resistance, sure. This looks like this looks like we're gonna go higher. Can it consolidate and move sideways for 2 weeks or 1 week? Sure it can. Sure it can. But if it does that, I'm looking for a higher push back to the upside. At least for now, we don't see any sign of reversal. The one thing about AMD that, you know, if you're trading AMD, you might be a little, you know, cautious about, is you can see on Thursday how we went down, right? You guys can see from the peak to the trough, right? Went down over 10% on that day, but the next day it recovered. It recovered from the trough back to the peak, pretty much 8%. Not everything, but a majority of it. So, you know, one thing when you're looking at AMD is, you know, try not to, in my opinion, this is my opinion only, you know, try not to catch onto a train, you know, when it is going significantly higher, right? You know, you want to kind of, if you feel AMD is going to go higher, then you should get on the train at a discount at least, right? So that you have some protection at the end. So that's AMD for you guys. We're, you know, this you guys, it's moved from $17 to $32.72. It's pretty much almost double since we last talked about it. So that's very interesting to know. That was the ticker to watch for a month. I think it was July or August or June. It's one of those months, but it's very interesting how quick it has moved since we talked about it. All right, guys. Thank you very much for this video. What? Thank you very much for watching this video. And yeah, please be safe out there if you're on the East Coast. In the meantime, hopefully you guys are enjoying your weekend as always. And I'll be excited to do another stock talk for you guys tomorrow, Monday. It'll be another one to kind of wrap up and see how we did in terms of analyzing it on the weekend. Of course, so that's kind of interesting to know how it plays out. And for the most part, what I analyze, you know, for the most part has come, you know, to fruition, and that's what I'm expecting. Okay, if you haven't taken a look at the course, please take a look at the course that I teach, that I've made. This is all by me, video lectures, lessons in the description box down below. Hit a thumbs up, and I'll see you guys tomorrow.